Today, we're diving into what looks like a major shift in the U.S. housing market. Look, if you spent the last couple of years feeling totally priced out, locked out, or just plain frustrated, trust me, you are not alone. But a new report from the National Association of Realtors suggests the tide is finally turning, and some real opportunities are popping up on the horizon.
I mean, this is the question, right? If you're one of the millions who've been just watching home prices go through the roof while mortgage rates spiked, feeling completely stuck on the sidelines, you've probably been asking yourself this exact thing. It's been a tough time, no doubt about it, but the data is starting to tell a different story.
And that right there, that's the core idea we're breaking down today. What's been called the Great Lock-in seems to be easing up, and that could be creating new paths for buyers who have been patiently waiting. So let's get into it.
To really understand the opportunity that might be ahead in 2026, we first have to rewind and look at the market gridlock we've been stuck in for the last couple of years.
You know, the period from 2023 to 2025 was basically a perfect storm of problems. On one side, you had these sky-high mortgage rates that just crushed affordability for anyone trying to buy. But on the other side, homeowners who were sitting on those amazing super low rates, well, they had zero incentive to sell, which kept the number of homes for sale at historic lows. The result was this classic lock-in. Buyers couldn't afford to buy, and sellers couldn't afford to move.
At their peak, mortgage rates shot up into that 7 to 7.5% range. And for millions of potential buyers, that number wasn't just high, it was a brick wall. It pushed the dream of home ownership just out of reach and pretty much ground the market to a halt.
But now, the economic currents are starting to shift. A bunch of different factors are beginning to unlock the market, and it all starts with the one number that matters most to home buyers, the mortgage rate.
So here's the headline. The National Association of Realtors is forecasting that mortgage rates are going to drop and settle down, averaging around 6% in 2026. Now look, that's not the crazy low rate we saw back in 2021, but it's a massive improvement from the recent peaks.
And here's where it gets really powerful. The NAR crunched the numbers, and a drop from just 7% down to 6% could expand the pool of qualified homebuyers by a staggering 5.5 million households. Just think about that for a second. That is an absolute game changer.
And hey, this isn't just wishful thinking. This whole shift is backed up by bigger economic trends. If you look at the Federal Reserve's own projections for 2026, we're seeing a picture of stability. Healthy economic growth, a steady job market, and most importantly, inflation is cooling off, which is the key to bringing those interest rates back down to earth.
But here's a really crucial point from this analysis. Finding an opportunity in 2026 isn't just about lower rates. Nope, that's only one piece of the puzzle. There's actually a specific formula for finding the markets that are truly ready to take off.
So, the NAR points to three key ingredients for a real opportunity market. First, you need those lower mortgage rates we've been talking about. Second, you need more homes on the market. Inventory has to go up. And third, and this is the real kicker, the home prices in a given area need to actually line up with what local incomes can realistically support.
This quote from the report just sums it up perfectly. It's not just about affordability in a vacuum. The real sweet spot, the true opportunity, is where that improved affordability finally meets a solid supply of available homes.
So that brings us to the million-dollar question, right? Where are these sweet spots? Which specific cities does the NAR think are going to outperform in 2026?
Okay, here they are, the top 10 opportunity markets for 2026, according to the NAR. I'll read them off for you. We've got Charleston, South Carolina, Charlotte, North Carolina, Columbus, Ohio, Indianapolis, Indiana, Jacksonville, Florida, Minneapolis-St. Paul, Minnesota, Raleigh, North Carolina, Richmond, Virginia, Salt Lake City, Utah, and Spokane, Washington. Let's just zoom in on a city like Raleigh, North Carolina for a second. It's a perfect example of this opportunity formula in action. It's got strong job growth and a ton of millennial households, which creates all this pent-up demand. So as rates ease up and more homes hit the market, Raleigh becomes a prime spot where all that demand can finally turn into actual sales. All right, so zooming back out, the big picture for 2026 is a market that's in transition. We're not talking about a return to the crazy frenzy of a few years back. It's more of a shift toward a healthier, more balanced environment for everybody, buyers and sellers alike.
And here's what that transition looks like in numbers. The NAR is forecasting a pretty big 14% rebound in existing home sales, which you can see in that first bar. Home prices, they're expected to rise, but at a much more sustainable 4% pace. And the economy is projected to add another 1.3 million jobs, which provides a really stable foundation for this recovery.
In the end, it all really comes down to this one sentence from the report, which captures the entire story of the 2026 housing market. Where lower rates and rising supply converge, opportunity reappears. It's not just one thing. It's that intersection, that meeting point of positive trends, that's creating this new window for homebuyers.
So ultimately, this whole shift brings the focus right back to you. As the national picture improves and these specific local markets start to heat up, the question is no longer if an opportunity will exist, but where will you find yours?